Ladies and gentlemen, good day and welcome to the Kolte Patil Developers Limited Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. I now hand the conference over to Mr. Shiv Muthu from Adfactors. Thank you, and over to you, sir.
Good evening, everyone, and thank you for joining us on the Q1 FY24 results conference call of Kolte Patil Developers Limited. We have with us today Rahul Talele, Group CEO, and Dipti Rajput, Vice President, Investor Relations. Before we begin, I would like to state that some of the statements in today's discussion may be forward-looking in nature and may involve certain risks and uncertainties. A detailed statement in this regard is available in the Q1 FY24 results presentation that has been sent to you earlier. I would now like to invite Mr. Rahul Talele to begin the proceedings of this call. Over to you, Rahul.
Thank you, Shiv. Good evening and very warm welcome to everyone present on this call. Thank you for joining us on a Friday evening to discuss the operating and financial performance of Kolte Patil Developers Limited for the first quarter of current financial year FY24. I would like to begin by sharing with you our views on the real estate environment, followed by an overview of key developments of the quarter. After my comments, Dipti will take you through the key financial highlights. We then look forward to an interactive session with you all, where we will take your questions and suggestions during today's call. Let me begin by sharing a few thoughts on the Indian economy and real estate market broadly, as well as our outlook on the key markets in which we operate. Within the global ecosystem of slower growth in 2022, anticipated recessionary conditions in some regions, slowdown in international trade, and most recently the US credit rating downgrade, India stands out and is widely expected to emerge as one of the fastest growing economies in the world over the next several years. The Indian economy demonstrates some positive tailwinds at a broader level. Last year saw growth across various facets of economic activity, and the outlook suggests continuing momentum on the back of several factors, including strength in the rural economy, lower inflation levels, and the significant infrastructure spending push. All these aspects are expected to drive economic growth that is currently estimated at around 6% during the current financial year. The real estate sector, being a key component of the country's economy, has continued to expand in an encouraging manner. Despite the increase in the interest rates, which now seem to have stabilized, affordability aspects of the real estate demand has remained at comfortable levels. We also see the desire to live better lives translate into a higher response for premium living spaces. Overall, we have already seen demand expansions, enabled reductions in inventory levels across formats, and the trend of higher absorptions may be expected to continue. Within this framework, our targeted markets of Pune, Mumbai and Bangalore are witnessing resilient demand trends backed by expanding employment opportunities, improving physical infrastructure and transport connectivity. At Kolte Patil, we have built a diverse customer-centric portfolio of offerings that are slated to capitalize on favorable market trends. Covering affordable, mid-income and luxury segments, we have continued to fulfill our customer aspirations over several decades, supporting their desire to lead happy and comfortable lives. This very recognition of customers' expectations has allowed to build a brand that is associated with trust and confidence. Establishing a deep market connect, we have seen ongoing customer demand across projects, segments and markets. In continuation of this trend, the first quarter has allowed us to build upon the record performance delivered in FY23, with all the key operating metrics showing solid expansion. During Q1 FY24, new area sales was up 52% to 0.93 million square feet, and sales value expanded by 58% to 701 crore. This was supported by an increase of 4% in average realization. Robust execution and delivery resulted in strong collections at rupees 513 crore in Q1 FY24, up 8% year-on-year, and firm revenues at rupees 571 crore. Based on firm demand, efficient execution, increasing brand recognition, available sustenance delivery, and the upcoming project launch pipeline with sales potential of 3,200 crores for the remainder of the year, we are confident to meet the stated pre-sales guidance of rupees 2,800 crores for FY24 and rupees 3,500 crores for FY25. As you know, we have also acquired 6 new projects till date in FY24 with an aggregate top-line potential of around 3,450 crores. This includes 4 projects in diverse micro markets across MMR region and 2 projects in Pune. In addition to this, we continue to assess several business development and expansion initiatives in our targeted markets. Further announcements will continue to have the same aspects of judicious thought and planning that goes behind all our new initiatives. We are committed to innovate deal structures and capital efficient growth engagements across all our projects. We have already launched 2.73 million square feet in the current financial year, including 1.52 million square feet across 3 projects in Baner, Pimpri-Nilak and Life Republic under our 24K brand to address the premium luxury segment. Recognizing the mood of a buoyant market, we have even reconfigured some of our apartment sizes to address the customer's need to live better. We have witnessed strong sales traction across our range of premium apartments that have sold faster, and we will continue to suitably align our offerings with this shifting trend. Overall, our new project launches have continued to make substantial contribution to sales amounting to 43% of our pre-sales figures for the quarter. Our flagship Life Republic project in Pune clocked sales of 0.52 million square feet during Q1. With the success of our new launches, we remain enthused to expand the portfolio further across our targeted markets. Our business development plan encompasses outright land acquisition, redevelopment, joint developments, and joint ventures. The core objective would be to gain traction while tracking capital productivity through a focused execution mechanism that adequately leverages and further builds upon the Kolte Patil brand. In FY24, in addition to the deals already announced, we are targeting new deals with a cumulative top line of rupees 7,000 crores that will underscore our growth prospects. To close, I would like to reiterate that going forward, we continue to see the country's strengthening economic prospects, improving lifestyle, and hybrid work formats now prevalent in corporate India, improve the demand visibility, including accelerated demand for larger homes and better living experience. We believe that Kolte Patil is positioned to benefit from this transition with its strong brand deeply associated with trust and customer connect across our core markets. With the trend of consolidation and formalization, buyers are turning to quality developers, and we look forward to deliver value across the entire ecosystem of stakeholders. With that, I now hand over the proceedings of this call to Deepti Rajput to provide a financial overview.
Thank you, Rahul. Good evening, everybody. I will now briefly take you through our financial performance for the first quarter of FY24. Based on CCM-based accounting, in Q1 FY24, we clocked revenues of Rs 571 crore as compared to Rs 200 crore in Q1 FY23. EBITDA for Q1 FY24 was reported at Rs 91 crore as against Rs 47 crore in Q1 FY23. PAT stood at Rs 46 crore in Q1 FY24 as compared to Rs 21 crore in Q1 FY23. Here we would like to remind you that recognition of revenue and profits are dependent on the timing of project completion based on statutory accounting guidelines. Our net debt to equity stands strong at 0.02x as on June 30, 2023, and the operating cash flows for the quarter stood at Rs 87 crore. This creates adequate bandwidth to expand our going forward growth aspirations. As we look forward to gaining more traction across projects and achieve further milestones, we are confident of the value we are delivering to our customers. The benefits are likely to accrue to all our stakeholders. On that note, I conclude my opening remarks and would now like to ask the moderator to open the line for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit Kanpal from HDFC Securities. Please go ahead.
Hello.
You are audible, sir. You may proceed with your question.
Yeah, hi Rahul. Congratulations on great set of numbers. Sir, with the first quarter sales itself, I mean, if I analyze it, you will be reaching out 2,800 crores of numbers. Do you think that there is upside risk to the guidance of 2,800 crores of retail for the financial year 24?
See, Parikshit, at this moment of time, we are confident of delivering 2,800 crores of pre-sales number. So, it will be too early to comment on this upside further.
Okay. On this Baner project,
but your line is not very clear. Request you to please use the handset while you're speaking.
Yeah, I'm using the handset.
Closer to the mic as well.
Yeah, I'm using the handset. So just on the Baner project, so I think we had launched 800 crores worth of inventory. So which month this launch happened? Because if we see the sales, this is about 242 crores, I think, from this project. So if you can just help us understand how has been the momentum on this project since the launch.
So this project got launched in the month of June, and we got the June end and July. So and within a month's time, we could offload whatever the inventory that we have launched, around 300 units. So we could offload around 50% of the inventory during the launch week itself. So around 250 crores of pre-sales number inventory that was sold out in that project.
And sir, how much was opened like for sale? So because I understand in the presentation you've given 800 crores phase 1 launch. So total 800 crores was opened and 242 crores got sold, or it was much lower number?
No, Parikshit, as a good practice, even if we are receiving a RERA, so we try to segregate our inventory launches during the launch quarter. So maybe in next 15 days we'll launch the further inventory out of that 800 crores inventory. So currently around 550-600 crores inventory is open for sale.
Okay, great. I mean, within a short time you could achieve a big number. Commendable. Just on some of the Mumbai projects which you have won during this quarter, so when do you expect these projects to get launched? Because I don't see them figuring in this year. I think leading that Vashi project, which is a big one, and other older projects. So I don't see any new project being outlined for FY24 launch. So when do you think this Mulund and other projects? Sorry, Mulund is already there. So the ones which you have acquired this quarter. So when do you expect these projects to get launched?
So, Parikshit, we are expecting these projects to get launched in Q1 of next financial year. Our endeavor will be to have launches in Q4, but currently we are envisaging launches in Q1 of next financial year.
Okay, and just the last question, sir, on this 1.4 million square feet on the notes to account which you have given. So can you please explain, this was with this Ivan Township deal, or what was it? I mean, can you give us some more details on that? The FSI 1.4 million square feet.
So, Parikshit, this is the Ivan Township deal. So, KPIT and ICICI have entered into a security redemption agreement of around 130 crores. So, present value of that is 112 crores to be paid in tranches of more than 2 years. So it cancels and nullifies the agreement between the ICICI Venture and Kolte Patil for 1.4 million square feet of development. And we have taken over the entire stake of ICICI Venture, which was balanced in township.
So I understand you were to develop this and hand it over to ICICI Venture. So now this gets nullified, so this gets added to your sellable area, right? And you pay them 112 crores. 112 crores needs to be paid to them for over the next 2 years, right?
In next 2 years, and this land has a potential of close to 35 lakh square feet.
35. So this 1.4 million was this was the land area, so this was not the FSI.
Parikshit, being a township, there is a fungible FSI. So though we have given them a certain physical land area, and on top of that, FSI was allocated of 1.4 million square feet. But that same land has a potential to consume more than 3.5 million square feet of FSI, and that is what we are going to plan for.
So this new ITTP policy in Maharashtra, so does it impact us anyways? I mean, in terms of FSI going up?
See, already FSI is 1.7, Parikshit.
Yeah. Also, this in Thane area and all, we have seen the FSI going up to almost 3.5, I think, because of the new ITTP policy, wherein half of the area has to be reserved for IT and then rest can be residential, can be done. So do you think that for us also this will be applicable?
We have the sufficient FSI, Parikshit, at this moment of time, and in Pune, unified DCR is yet to get implemented for the townships and the PMR region. So that itself will provide a further, potential of FSI in this same township beyond 1.7. So our journey started from 0.5 FSI to 1 FSI. Now we are confident of consuming almost all FSI of 1.7, and there is a further potential, but that is still under discussion.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors Private Limited. Please go ahead.
Hi, sir. Thank you for the opportunity. Just if you can give little more color on, because in Mumbai we are looking for a lot of redevelopment projects, and with this new ITDP policy, so how do we see the potential and how is the return on vis-a-vis a new project, and as well as cluster vis-a-vis single building redevelopment? So if you can give little more color, and how big is that opportunity for us?
There are multiple redevelopment opportunities in Mumbai. One is a society redevelopment, the other is a cluster development, the third is the slum redevelopment. So currently we are into a society redevelopment model. Having said that, we are exploring some cluster redevelopment opportunities also. It depends on the redirectioner of the property and the vicinity area. And it depends also on the what kind of commitments that we have given to the society while taking the deal. So in terms of the returns are good. Particularly over here, we measure returns in terms of a payback and a IRR, because our investment starts at the project launch stage itself, or maybe -3 months of that. So a payback is one such criteria, like what we mentioned in the opening remarks, optimum utilization of capital. So that is on a priority for us. So in terms of the EBITDA margins, we are confident having the EBITDA margins of upwards of 20-25% in redevelopment projects, and the IRRs are more than 35-40% for these redevelopment projects.
So, how many such projects are in pipeline? This Mulund, which we launch, is I believe is a cluster development, correct?
So Mulund we have not yet launched. So we are under process of various approvals. So currently,
one which we have signed.
So we have signed 2 projects at Goregaon. So one project that we have already delivered over there that project is sold out, and based on the good ongoing delivery of that project, we could close another 2 deals in the same vicinity of Bangur Nagar, Goregaon. And these projects we have just a few days back we have announced to the market, and this will be launched in next 3 to 4 quarters.
Yes, sir. And the Mulund which we signed the society deal is under cluster development. Is that fair understanding?
It is not under cluster development. It is under 33/7, and we are planning to launch that in Q4 or Q1 of next financial year.
So what are the benefit of a cluster development vis-a-vis this single society development, and is there a difference in the return or IRR?
So see, as I mentioned earlier, so it depends. So there is a various cost benefit analysis that we have to do in terms of the three parameters: additional FSI potential because of the cluster, the MHADA component which is being added because of the cluster policy, and the third is the ready reckoner of that area, because on the ready reckoner your additional FSI and your MHADA potential is linked to. So in some locality cluster development, I mean particularly all those localities where the ready reckoner rates are higher, over there cluster development makes sense, particularly in a area close to Andheri and Ghatkopar and that area. So as you go northward, so there is a, the delta between the cluster and regular policy is minimized.
Yes, sir. So, and how big is the opportunity development, and currently with how many people are we in talk? Like, see, we already closed 2 deals with in Goregaon. So, is there further deal in pipeline?
Sorry, can you please repeat the question?
How big is the opportunity and what time frame that for this redevelopment are we looking? And second thing, what is such a pipeline? We have already announced 2 in Goregaon. So if you can give little more color on pipeline also.
So see, currently we are evaluating multiple redevelopment projects in Mumbai. So maybe more than 10 redevelopment projects at various stages. Out of that, 3-4 projects are in advanced stages of discussion. So, I mean, and across Mumbai as a geography, because we have a strong presence in western part of the Mumbai, so we'll continue to have a good presence over there. Having said that, we are concentrating in the central suburbs as well as the Navi Mumbai suburbs of Vashi and surrounding area. So you will see few announcements in the next few quarters.
Thank you. Ladies and gentlemen, to ensure that the management is able to address questions from all participants, please limit your questions to 2 per participant. You may rejoin the queue if you have a follow-up question. The next question is from the line of Pritesh Sheth from Motilal Oswal Financial Services. Please go ahead.
Hi Rahul, thanks for taking my question. Firstly, while you spoke about Mumbai pipeline, I want to understand, how Bangalore is looking for us in terms of new project additions. While we have made good progress in last 1.5 years in Pune and Mumbai both. Hello?
Yes, the line for you is not very clear, sir. It's sounding muffled. If you could please use the handset while you're speaking and repeat the question, please.
Sure. Is it clear now?
Yes, this is much better, sir. Please go ahead.
Okay, perfect. So my question was on Bangalore, pipeline in terms of new project acquisition. So we have made good progress in Pune Pune and Mumbai both in last 1.5 years. How are things looking up in Bangalore?
So, Pritesh, we are evaluating around 3-4 opportunities in Bangalore, but it is too early to comment about the closure of those opportunities. But yes, we are evaluating. We are taking up Bangalore as a serious geography for us, because we have delivered multiple projects in Bangalore, though not in terms of volume, but it is a quality delivery, and we want to encash on that already brand establishments in Bangalore. But as compared to Mumbai and Pune, we are, Bangalore is a third priority for us.
Got it. So in terms of the deals that we also evaluate, we right now are giving much more lower importance to Bangalore, or we are facing some tough competitions in Bangalore to get some deals.
Pritesh, competition is everywhere, including Pune, Mumbai, Bangalore. So we cannot bypass the competition. So, I mean, if you want to survive in the business, you have to be one edge ahead of the competition. And so, I don't think that is a worry for us. So the point is, since we are acquiring multiple projects in Pune, working on multiple projects in Mumbai, our priority is in these two geographies, but that does not mean there is no priority for Bangalore, because we have the independent team which are well versed for the Bangalore market, is already present in Bangalore. So they are working on the multiple opportunities. On a weekly basis, we are evaluating but at this time it is too early to comment about the closure of this BD pipeline in Bangalore. But we are not competing with the big projects over there. So our approach is very simple, like what we have mentioned in our BD strategy. We want to have a asset light model in Bangalore with a top line potential of 1 million to 1.5 million square feet.
Thank you.
Got it.
The next question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, congratulations on a very good set of numbers. Sir, a couple of questions on my side. As far as the launch pipeline is concerned of 4.74, can you throw some light on which are the projects which will be coming on stream in next 2 to 3 quarters, and where are we as far as the approvals are concerned?
Sorry, Shreyans, but can you please repeat the question?
Sure. So, sir, my question pertains to the balance launches of 4.
Sorry to interrupt, Shreyans. Request you to please use the handset. It's sounding the same as earlier.
Yeah. Am I audible now?
Yes. Please go ahead.
Yeah. So, sir, my first question pertains to the 4.74 balance launch pipeline. If you could throw some light on the key projects, which would be launching in coming quarters, and as far as approvals are concerned, where are we on that?
So, Shreyans, we are quite in the advanced stages of approval for our projects pipeline. So, we are confident of launching all these 4.74 million square feet, which is balanced to get launched in this financial year, which has a value of around 3,200 crores. So, these are in 3 buckets. So, in Pune bucket, a project at NIBM, Tathawade and Wagholi are certainly getting launched in this financial year itself, at the end of Q3 or beginning of Q4. And the LR projects, the balance LR projects like R5, R13 phase 2 will get launched in Q3. And B3, we are trying to push the approvals for B3 so that we'll have the visibility in Q4 for B3.
Got it. Sure. So, sir, my second question pertains to the realization as far as LR is concerned. We've seen healthy jump even this quarter. So, is it closer to 6,400 rupees square feet? So, is it because of price hikes, or is it because of the mix which we've higher K10 projects which we've seen?
So, Shreyans, at Life Republic, as I used to mention in our earlier calls, continuously our efforts is to improve the price realization without having a drop in the volumes, and to large extent we are successful with our strategy. And this is purely on account of better price realizations in R13 and other sectors which we have recently launched. And on top of that, there are some portion, but I think that got some part of a commercial. Because of that, it is looking like a 6,400. So in order to segregate around in the residential, our average is anywhere between 5,400 to 5,800, and shops and office spaces, shops that we are selling around 13,000 to 17,000 a square feet. So blend of that is 6,400. But yes, we are continuously improving our price realizations in these 2 buckets, residential as well as shops.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah, hello. Am I audible, sir?
Yes, you are audible, sir. Please go ahead.
Yeah. Hi, Rahul. Congratulations to you and the team for a very good show. So Rahul, just two questions. So one on LR. So I mean, combined, we're doing about this time we've done more than 0.5 million square feet. We were around 1 million, between 1 and 1.2, 3 million for many years before this pickup that we've seen since last 3-4 quarters. So this, do you see this as like the more base level now, as that area also and that whole project also, as you said in the past, that becomes more sort of filled and multiple kind of use cases are now getting or multiple price points are getting filled there. So do you think this 2 million a year, if one can analyze this, is that the base now, or just wanted to hear your perspective on this?
So, Rohit, categorically, since last couple of years, our endeavor was to have the multiple project and product portfolio at LR, and to largely we are successful in that. So, if I want to categorize my product in terms of sizing and price bucket, there are more than 25 unique products available in township. So hence we call this a supermarket of products, and across category we are getting a good response. To answer your question, yes, last year we have concluded sales of more than 1.7 million square feet, and this year also we are confident of surpassing 1.5 million square feet for sure with improved realization.
Right.
And going forward also, we are confident because we are launching multiple projects in the township. So we have the high rises of 70 meter, super high rises of 100 meters. MIG product is available. Even we are planning to launch 24K products. 24K, regular villa projects and 24K villa projects are already being launched. So, the entire portfolio is available except the commercial office spaces. So, we are confident of consistently surpassing 1.5 million square feet as of now.
Right. And just one small question on LR. So, do you see from a realization point of view, there is more upside here? Because this was around 5,500, 6,000. It has moved up close to 6,500, 7,000 now. So, is there a number which you think that you want to hold, or it becomes beyond which it becomes unaffordable or something, or unattractive?
So, Rohit, let me share one fact. On last weekend, we launched one sector in township, R22. Within a 1 week, only on Saturday and Sunday, we have closed more than 200 units for that project. And that shows the brand Life Republic for us. And in order to answer your question, it depends on which product that we are offering. If it is a MIG product, there will be we'll try to get the price premium wherever possible, but without hampering our volumes. And certainly for 24K projects, there will be a positive price betterments as compared to, because currently our most of the portfolio is the MIG portfolio. So certainly there will be a price betterments in 24K portfolio at Life Republic.
Thank you. The next question is from the line of Abhishek Lodhia from Yes Securities. Please go ahead.
Yeah, good evening, sir. One basic question. Can you hear me?
Yes.
Yeah. So one basic question. So year back, we were having 11 odd projects in redevelopment, and it was not moving year back or something like that, right? All of a sudden, we are, at the juncture where we are launching many projects, we are tying up many projects, right? And at the same time, on a LR front, we used to do single or one sector at a time or something like that. Change in this 1 year,
I mean, on a redevelopment side, whether it's a policy support or maybe approvals are you are getting timely, and how, I mean, society redevelopment is something which is a tedious project, but it is also looks like it is getting streamlined very fast. So what exactly has changed in this 1 year? And on the redevelopment front and as an entity as well, because all of a sudden in LR we are doing, I mean, in last 1 year, not all of a sudden, but last 1 year we are doing 3-4 sectors at a time and multiple product at a time. So what exactly has changed in the company, or what exactly has changed on the policy, or I mean, that's the basic question.
So, Abhishek, for Mumbai redevelopment projects, see, we have a presence in redevelopment in Mumbai since 2012-13. We could deliver, couple of projects in first 7-8 years. So, but during that time, we understood and we learned very well the intricacies of the real estate business in Mumbai as a geography, because we believe real estate is a kind of a geographic business. So from that perspective, we are now well learned from Mumbai redevelopment perspective. On top of that, currently whatever the society redevelopment that we are announcing or on the verge of closure, we are certain about their launches. So we are not closing the society for the sake of just showing that in terms of the hyped up business development opportunity.
No, sir, that's not the question at all. The question is only about whether the processes are getting streamlined, or how is it?
See, processes are same. You have to get the environment clearance, you will have to get the local IOD and CC. But yes, I must say in last 6 to 9 months, the environment clearance cycle has improved significantly, and likewise because of the digitization, the other things are moving fast. But see, beyond this government support, I would like to add about the Kolte Patil approach for the Mumbai as a geography. Okay, because of the good confidence of our past deliveries and because of the good response that we are getting in our ongoing projects, there is a good amount of push internally to close more and more projects in Mumbai wherever we have the comfort of or visibility of launches.
Okay, sir. Okay. Got it.
In terms of the LR, again, since now all of a sudden, see, in pre-COVID era, even at that time, it was a supermarket of affordable products.
Yes.
Because of the COVID and post-COVID scenario, many buyers who are, upgrade buyers are expecting a larger unit. Let it be MIG or HIG. So from that perspective, we are launching more sectors in township so that our portfolio is much wider. And that is adding to our volumes and value added.
Basically, every price point offering you are looking at, right?
Yes, that's correct. So we have pre-COVID we had the project portfolio of 30 lakhs to 80 lakhs or 85 lakhs. Now we have a product portfolio of right from 30 lakhs to 2.5 CR.
Thank you. The next question is from the line of Pritesh Sheth from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the follow-up opportunity. So just, I think, couple of bookkeeping kind of questions. One, because of the...
But the line for you is not very clear.
Yeah, sorry. Is it better now? Sorry.
It's much better, sir. Please go ahead.
Yeah. So first, couple of bookkeeping questions. First on, the 1.4 million square feet, that transaction that we did, that CCD transaction, obviously our interest cost looks high. How much of that fair value, adjustment is recorded in interest expense? Just to understand the actual interest of provisioning this quarter.
So, Pritesh, in this quarter, we have recorded around 30 crores.
Okay, got it. And this CCD increase is because of the Baner project, right? The debt increase that we have had?
Yes, Baner and Maruven. which is the Pimpri-Nilem project.
Okay. And actually, there won't be any outflow. It would be financed or repaid through the project cash flows that we'll have. Is that understanding right?
That's correct.
Fair enough. That was 2 questions. Thank you. All the best.
Thank you. The next question is from the line of Dhwanil Desai from Total Capital. Please go ahead.
Hi. Congratulations to the team for very good numbers. So I have one clarification and 2 questions. So one clarification you mentioned, Rahul, is about, that you will do BD of 7,000 over and above the deals that you have closed, till date. Is that correct?
That's correct understanding, Dhwanil.
Okay. So second question is on LR. So if I look at our launch pipelines, whatever we have launched in FY23, FY24 so far, and whatever we are going to launch in FY24 for the remaining period. So LR put together, we launched 2,500 crore in this year and probably 1,200 crore we launched last year. So that's a very large inventory. So how do you see about absorption of that kind of inventory in a single micro market?
So, Dhwanil, few minutes back I mentioned in one of the projects where we launched whatever the inventory that we launched. So on 2 weekend days, we could offload more than 30% of the launch inventory. So that shows the brand LR, and we are, we are targeting to get the benefit out of this good brand value, which has been established at LR, and LR has already crossed that inflection point, and on sustainable basis, as I mentioned earlier, we'll continue to do good numbers at LR.
Okay.
Even if there are multiple projects, because as I mentioned, from a RERA perspective or from a financial closure perspective, we are launching only very limited inventory in various sectors. So, that itself is, and in terms of the first quarter of the launch, we can get a good amount of financial closure for that launch inventory. So I don't think launching so much of inventory is a concern for us. In fact, everyone is expecting to launch more and more at Life Republic, and that's the feedback that we are receiving from the market. So since last 1 or maybe 5-6 quarters, this is the best performing project of Pune on quarter basis.
Oh, wow. Congratulations for that. Yeah. So, and second question is, we have very strong cash flows and we have very strong balance sheet. So, out of whatever 8,000 crore of BD that we intend to do, thinking strategically, considering that we are in an upcycle with good balance sheet and cash flow, do we lean more towards doing our own projects rather than JV, JDA structures?
So, Dhwanil, it depends on the opportunity. If there are good, we will continue to do JV, JD projects, but at the same time where we are finding a good opportunity of upside from a long-term perspective, we are investing in that specific project with a structured outright manner. And Mumbai as a territory, these society redevelopment projects are as good as the JV projects for us. Even in Pune, when we are talking about larger projects, like we are in a discussion of couple of large size projects where investing at one location on an outright basis against investing a little lesser amount or marginal, significantly lesser amount on a JV basis. So we try to do that cost benefit analysis, and we are taking a judicious call to have the optimal utilization of our capital. But to tell you, there are enough opportunities, and we are working on multiple opportunities to get the best productivity out of our capital available.
Thank you. The next question is from the line of Alpesh Thakur from Antique Stock Broking Limited. Please go ahead.
Thank you for taking my question, sir. So I have just one question. From our past interaction, as one of the Pune expansion strategies that we have is focusing on micro markets where we do not have much presence.
Sorry to interrupt, but the line is a little bad for you in between.
Okay. So, is it clear now?
It's and you also have disturbance in the background, sir. We're not able to hear you clearly.
Okay, just a minute. Is it clear now? Any better?
This is a little better, sir. Please go ahead.
So, one of the Pune expansion strategies for us is focusing on micro markets. We do not have much presence.
Sorry to interrupt once again, but we are losing your audio in between. May I request you to please rejoin the queue after you establish a better connection?
Yeah, sure.
Thank you. We will take the next question, which will be from the line of Rishikesh Oja from Robo Capital. Please go ahead. Rishikesh, the line for you has been unmuted. You may proceed.
Yeah, hi. Am I audible?
Yes, sir, you are audible. Please go ahead.
Okay, thank you. Hi. Thanks for the question.
Sir, sorry to interrupt, but we are losing your audio, sir, in between.
Am I audible?
No, sir, it's still not clear.
Give me a second.
Sir, may we request you to please rejoin the queue after you establish a better connection, sir. We will take the next question from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, thanks for the follow-up opportunity. Sir, one, in terms of deliveries, can you throw the number for 1Q, and are we on track for the targeted guidance for the year, 3.5 million square feet?
Yes, we are on track in terms of the value deliveries for this financial year. So we are expecting a deliveries of more than 1,700 crores for this financial year.
Sure. And sir, secondly, in terms of risk, what are the risks, which you foresee as far as redevelopment as a market is concerned, and what are we doing, to just safeguard ourselves?
So, Shreyans, particularly for redevelopment, our large investments are linked to vacation of the plot, and there are very minimal title risk in the redevelopment because society is, already in place since 3, 4, 5 decades. So we don't foresee any kind of risk in society redevelopment, barring the one risk of timing of the launch. Because in society redevelopment, on multiple occasions, you need to take the concurrence of the general body or the managing committee, and that is sometimes it is a time-consuming process. But having said that, we have addressed that kind of risk through our, strong license team in Mumbai.
Right. Okay. Sir, and sir, just for my understanding, as far as society redevelopment is concerned, we need certain percentage of approval, say 70 or 80%. And is it that we work on that, or we go ahead with only 100% and then only we go ahead?
So, Shreyans, in most of our society, we have gained 100% consent from the members. So, and that is the first stage of any society redevelopment. We call it a 79A process by Registrar of Societies, and we follow that process. So, generally, we try to get the 100% consent at the initial stage of the project.
Thank you. The next question is from the line of Alpesh Thakur from Antique Stock Broking Limited. Please go ahead.
Am I audible?
Yes, sir, you are audible.
Okay, thank you. So, sir, my question was, one of the key expansion strategies for us in Pune is, to focus on micro markets where we do not have much presence. So, just want to understand which are the micro markets where, we still have a lot of opportunity to grow, and which are the micro markets where we are already very strong in.
So, Alpesh, Pune as a market, there are 4 bifurcation of a Pune market. So, the biggest market is West Pune, and the second biggest is the East Pune. I mean, particularly not even the East Pune, Nagar Road and the surrounding suburbs, like from Viman Nagar, Kharadi, Kalyani Nagar, Wagholi, that belt. So, we have a very strong presence in the west part, and which is the biggest micro market of Pune, which accounts almost 40 to 50% of the pre-sales number. And so we have multiple projects. We are strong in a BD pipeline also in that micro market. And we are targeting to enter this, we have already entered this east part of the Pune region through acquisition of Wagholi land. And we have delivered multiple projects in this geography. We are continuing to strengthen our presence further in this east part. Apart from that, Keshav Nagar and north part of some southern part of the Pune, southwest part of the Pune, we are targeting, particularly from Vadgaon till Ravet. If you are aware about the Pune as a geography, Vadgaon till Ravet, and some part of PCMC and some part in Keshav Nagar, Nagar Road are our targeted markets.
Okay. Okay, got it. Got it. Thanks. And that's it from my side. And all the best. Yeah.
Thank you. The next question is from the line of Rishikesh Oja from Robo Capital. Please go ahead.
Yeah. Am I audible?
Yes, sir, you are audible.
Yeah, hi. So
sorry to interrupt once again, but the line is breaking up for you again, sir. We're losing the audio in between.
Am I audible now?
Yes, this was much better, sir.
Okay. So, what margins do we look to do for FY24? Can we do like 20% EBITDA margins and 10% net profit margins for on a reporting basis?
See, Rishikesh, for us, on a revenue recognition perspective, see, currently we are in a growth trajectory. So my revenues are of the past pre-sales, and my cost, particularly marketing cost and the other fixed overheads, are of the current ongoing tenure. So if we are growing at a much better pace, then certainly you will see some kind of adjustment in this CCM numbers. But at a project level, from a project level numbers perspective, yes, we are confident of delivering more than 20% EBITDA numbers, whatever the projects that currently been launched or will be getting launched in the future.
So what would be that upfront cost as a percentage of the revenue?
So
just a broad idea.
So see, it is in the range of say around 3% to 5-6%.
So basically,
Sir, sorry to interrupt, but the audio is lost again, sir.
Am I hear now?
No, sir, we cannot hear you clearly.
Yeah, am I audible now?
Sir, it's still breaking up in between. Sir, please rejoin the queue after you establish a better connection, because we are not able to hear you at all.
Sure.
The next question is from the line of Harsh Beria, an individual investor. Please go ahead.
Hi. I have a question about a new business development. I think last quarter we had guided for spends somewhere between 500-550 crores in FY24. We have already incurred about 280 crores in Q1. So are we planning to spend more than 500 crores, or are the costs upfronted this year?
See, there is one deal betterment that we have done in the recent times. So Baner project it was a JDA project, which we bought out the stake of the landowners in that project. So it was around, the significant portion of this investment is linked to that Baner project. And because of that, this number is looking higher. But yes, there is a good amount of provision through internal accruals, as our net debt is all-time low, just 17 crores. So we have a good amount of bandwidth open over there as well to fund our business development opportunities. But the numbers can go up, but through this, we are confident of attending this requirement largely through internal accruals and partially by raising few debt proposals.
Thanks for that clarification. My next question is about, so in general, we are doing very, very well in terms of pre-sales. There's one project which is called Aqua, which is in Bagoli, where our pre-sales have been a bit lower. Do you want to talk about that project?
So, see, Harsh, we launched 2 towers in that project, which got sold out. And because of the lack of clarity in a unified DCR, we could not get the further approval in that project. So we are expecting that approval in next few days, maybe in the next week or so. So, and we are expecting a very good velocity in this project.
Okay. And my last question would be, so we have been doing a lot of pre-sales in the last few quarters. I think we are averaging now 700 crores quarterly run rate. So all of this, when would the majority of these delivered? When would this get delivered? Would this be in FY26 or around FY25 period?
FY26 onwards, barring a few exceptions of low-rise development of 12-story development and row houses, which will get delivered before FY26. Rest will get delivered FY26 onwards.
So our revenue run rate will increase from this 1,600 crores to, let's say, 2,500, 3,000 crores starting FY26-27.
That's correct, Harsh.
Oh, okay. That's it from my side. Thanks for answering my questions.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. Participants, to ask a question, you may press star and 1 at this time. The next question is from the line of Harsh Beria, an individual investor. Please go ahead.
Yeah, thanks for this follow-up opportunity. It's really commendable, like the kind of traction we are getting in our 24K projects. Do you remember a time in the past where we used to sell these high realization or luxury projects at such high velocity? And if yes, when was that?
So, see, in the past, if you see our 24K projects, so till date we have delivered around 24K projects in last 10 years. And in this financial itself, we are planning to launch 5 24K projects. So because our offerings are on a higher side, and even though there is a good demand from a market, we are getting a good velocity in 24K projects. So in the past, Harsh, to answer your question, in the past, we have not launched multiple 24K projects at one time, at single tenure.
And is this traction that we are getting, is it because of lower supply in this part of the market?
See, the feedback that we are getting, because we try to get the customer feedback after booking, and even if the customer is not booking. So the feedback that we are getting is because of our good quality deliveries of the past in 24K segment. So that itself in Pune as a separate brand. So people recognize that not as a Kolte Patil project, but as a 24K product. So that itself is a very good, feedback from the customer that we are getting. And based on that feedback, we are planning to launch multiple more projects in this category. And yes, post-COVID, there is a good demand for, spacious units and upgrades also. So many units are being sold to the upgrades customers, the people who are working in IT in 10, 15 years, have a good accumulated savings, wants to have that good aspirational, living experience. So, and these people are buying.
And what are the margins in these projects?
So margins are better as compared to our MIG projects by 4 to 5 EBITDA percentage.
Thank you. The next question is from the line of Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thank you. See, I don't know if this question was answered earlier, but if you look at Pune, which part of the city is evolving faster? And in terms of our future acquisition, how are we positioning ourselves?
So, see, particularly we are very bullish on the west part of the Pune as a market, considering the fact that that since last 4-5 years, that is this Pune west market is around 40% of the entire volume, and we have the multiple projects including our Life Republic, Baner project, Pimple Nilak project, or even a Tathawade, Kivule projects, or some few, the BD that we are working upon. So these are concentrated into west part of Pune. On top of that, because of the good weather conditions of the west Pune, again a metro connectivity to Hinjewadi, good connectivity which is getting established between Pune and Mumbai by expanding this 6-lane to 8-lane. The work is already going on. Missing link work between Pune and Mumbai at Lonavala Ghat, if that work is getting over in next few months, maybe by Diwali, so that will reduce the time to reach to Mumbai by 30 minutes. On top of that, Navi Mumbai airport is accessible in hardly 70 to 90 minutes from west part of the Pune. So there are multiple factors. Let it be infrastructure, demand from the customers, weather conditions, educational institutes have a strong presence in Pune. And on top of that, one of the largest IT park is in west part of the Pune in Hinjewadi. So we are bullish in the west part of Pune.
Yeah, thank you for that. And if I may add one more, see, we have contiguous land banks closer to Life Republic. So what is the incremental accretion we could see in terms of more land bank additions near or in line with our Life Republic project?
Because Life Republic and surrounding area is a no development zone, and since we have opted for a integrated township policy, we got the FSI and we got the development permission. So there are good opportunities available beyond township. Wherever we are finding a attractive opportunity, we are working with a completely zero cash outflow model by giving them a area share to the farmers, and we'll continue to do that on maybe a 2 acre, 4 acres, 5 acres land parcel. But from a cash outflow perspective, we are very judicious beyond this ICICI transaction, because it was these 2 land parcels were at the prime location within the township.
Thank you. The next question is from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, if I missed that, how much cash flow that we have to spend on these already project launch and under construction in next 2-3 year time frame, and how much money is receivable of the already sold area?
So, Mr. Bharat, you can reach out to our IR sale and they can give you further details on this. So, details are not readily available in front of me.
Okay. And sir, how much as on today is our current unsold inventory? Ready unsold inventory?
Ready, again, we are best in the industry. We don't have any ready unsold inventory with us. If any, it is not more than 20-30 crores. So I would like to mention over here, as a group, we believe in a quick financial closure for any project. So during the RCC stage itself, we try to sell as much as possible, and that gives us a good amount of confidence from a financial closure perspective.
Thank you. The next question is from the line of Rohit from iThought PMS. Please go ahead.
Yeah, hi Rahul. Thank you again for this opportunity. So just 2 questions. One, just from your last answer that you gave to the previous participant's question. typically, what percentage of your project do you sort of sell in order to get that comfort that to get that balance between getting that right amount in terms of financial closure and also playing for the upside in terms of increase in the price slabs?
See, generally, during a launch quarter to first 6 months, or there is one more criteria till the time we reaches to the plinth level. So we try to sell around 30 to 40% of the inventory at least for the project. So beyond that, around 1.5 or maybe 6 quarters, we are good financial closure in that project, and then that project goes into a sustenance mode with a better and better price realization. But we are getting a response beyond this. We are getting a good customer traction. So in the launch quarter or 2 quarters itself, we are selling around 40 to 50% or even beyond that.
Understood. And my other question was...
not with the flat APR. So wherever we are finding an opportunity, even during the launches, we are improving our price realization. So as an example, Baner as a project, so we launched that project at 9,000. So within the first 150 units, we have already increased price by 250 rupees a square feet.
Right. Okay, understood. And Rahul, just one more question. I mean, we've executed really well and the future also looks very good. But from a risk point of view, what do you see are the big risks, whether it is our own execution or from a team point of view or from an external point of view, like cycle itself? If you can just maybe spend some time there, that will be really helpful.
See, there are risks involved and various parts that you have just mentioned. So risk from a employee perspective or team perspective is, the retention of the team is the risk. Our attrition rate is very low as compared to the industry, so we are well placed from that risk perspective. On top of that, getting a good talent, new talent is also a challenge. But currently we are well placed in terms of our size of the team. From an execution, because real estate as an industry is doing well, not only Kolte Patil is doing well, there are other players also. So because of that, getting a good contractors, getting a various good resources, all types of resources is a key risk for the real estate as a business. So I would call this as one of the biggest risks for deliveries or the handing over the possession. But we are well placed again in this part because we have nurtured the relations with the contractors. So most of our contractors are repetitive contractors. So they are working with us. And apart from that, I believe macro is also, that risk is always there as a business. So I don't want to comment on that. But these are the 2 risks that I can envisage for real estate or for Kolte Patil.
Thank you. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you once again for your interest and support. We'll continue to stay engaged. And if you have any further questions, please feel free to reach out to Dipti Rajput at Kolte Patil Developers. Look forward to interacting with you next quarter.
Thank you. On behalf of Kolte Patil Developers Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.